We will have to endure more and longer. Last week was not full of important events. But even those that did occur reinforce the belief that the higher for longer scenario is the main option for the Fed's future actions. Macroeconomic data indicate that the final victory over inflation has not yet been achieved, although significant progress has been made, and the U.S. economy is reluctant to cool down, which is good on the one hand, but on the other hand, it could lead to a new price increase in the near future. Investors and economists do not believe that the Fed will start cutting interest rates in the near future. It is more likely that the rate will remain at the current level, higher, for a long time, for longer. Hi, this is a quick review from Ivan Kompan, Edinburgh Business School analyst.
The probability that the Fed will raise the rate by 25 basis points this year is now 40.2%, which is a significant increase from 30.8% last week and 24.9% a month ago. The Fed's GDP Now model, as of September 6, predicts that in the third quarter, U.S. GDP will grow by 5.6%, which can hardly be called a recession. However, the main scenario is still the one in which the rate will remain at the current level. Its probability is 55%. An article by the Chicago Fed published this week argues that the effect of previous rate hikes has already spread throughout the economy, and that what the Fed has done is enough to bring inflation back to the desired 2% level as early as 2024.
Oil prices continue to rise. Since July, the price of Brent has risen by more than 25% and has already surpassed $90 per barrel, which is not surprising, as Saudi Arabia had previously warned that it would do everything in its power to keep the price high. So, the story with oil may be the same as with the higher for longer bet.
Not very good news comes from China, which continues to build its new Great Economic Wall. China's central bank is actively buying gold, selling U.S. government debt, and fighting to de-dollarize foreign trade. However, the problems are growing. The real estate market is feverish. This effect is spreading to other industries, including the financial sector, and the index of activity in the service sector has fallen to an 8-year low. China's economic problems will not be contained within the country, no matter how high a wall the Chinese communists build. If the situation does not change for the better, it will spread to the whole world.
One of the bricks in China's Great Economic Wall is the ban on the use of iPhones by government employees. Of course, this is bad news for Apple, whose stock price fell by more than 6% over the week and also dragged down the Nasdaq index, which is not surprising, as China is one of the most important markets for many technology companies, directly or indirectly, such as Qualcomm, which is a major chip supplier to Apple. Now China has to ban its officials from driving Teslas, washing Ariel, and drinking Coca-Cola, which would be a devastating blow to corporate America.
And finally, we would like to remind you that the information you have just listened to is not an investment advisory. Remember, investments in the stock market are always tied up with financial risks. So be careful and cautious. Like and subscribe to our YouTube channel. See you soon.